Good morning, traders and investors. Welcome back to the #1 morning show to get your trading morning started. Let's talk about today's topics. We'll get into Fed inflation talk, Bed Bath & Beyond securing the loan, Cathie Wood sells and buys the dip, earnings on Nordstrom, Toll Brothers, Intuit. We'll talk about Tesla's stock split, Wendy's E. Coli. Just be careful out there with those burgers sometimes. We'll take a look, of course, with our special guest, Paula LaMonica, digital correspondent at CNN Business. We'll dive into some of the meme stock talk out there. Let's dive into today's show. Welcome to it, Pre-Market Prep, and let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. All right, good morning, traders. Let's go ahead. Let's bring on Dennis Dick, and let's take a look at the overnight action. First thing I'll ask, what did you see yesterday, Dennis, in the overnight action?
Well, in the overnight action, it was kind of quiet. In the daily regular session, we saw more follow through. Some of the stocks that had been getting beat up continued to get beat up here. Some of the growth names were getting beat up. But it was kind of quiet. I think a little bit of calm before the storm. Obviously, we got, the Jackson Hole coming up here. We're going to hear from Powell directly on Friday. So there's lots of things to, information's going to be coming to this market. So I think it felt really like one of the dog days of August. It was actually kind of quiet yesterday. But there's action in certain stocks here, Mitch.
That's for sure. As you guys can see in the overnight action, pretty much sideways again. Yesterday we were kind of sideways also, and then eventually just came down a little bit in the intraday market. It really wasn't it was kind of a nothing day here. It was a very low volume day for a lot of the index, and so we'll see today if that volume kind of increases. But let's talk about some of the stories that are out there right now. Of course, everybody's just watching what happens out of the Jackson Hole Symposium. Of course, everyone's waiting for Fed Chair Jerome Powell to speak, but we did get some Fed talk yesterday. This came from comments from Fed Reserve Bank of Minneapolis President Neil Kashkari, and here were some of his comments. He said that the big fear I have in the back of my mind is that we're wrong and the markets are wrong, and that inflation is much more embedded at much higher levels than we appreciate or the market appreciates. He said, commenting on market expectations of inflation coming back down to 2% within the next 2 years. He also stated that then we're going to have to be more aggressive than we anticipate and probably for longer to bring inflation back down. He said this speaking at an event at the University of Pennsylvania. And I think this is, comments that I think we're also kind of expecting similar comments from Jerome Powell. So I thought it was interesting Fed talk.
I think you're getting a preview into what he's going to say on Friday. And I think, the market is hallucinating to just think, oh yeah, we peaked inflation. We're going back down to 2%. We'll be back, we'll be back to 2% inflation, this time next year. It's not happening. The whole consumer mind has changed, like people now have, somewhat accepted some bits of inflation here, but, it's also just, the people, it's from the COVID pandemic, it really kickstarted a lot of different things. The free money printing press was going for so long. People just expected free money forever. And obviously that's not the case. I do think if they keep raising rates, you will get some demand destruction and that should bring down price. But it's just not going to come back down quickly. It's not going to be like, boom, we're back down. We're happy. We're back to 2% inflation. Okay, kickstart the punch bowl again. We're ready to rock. I just don't see us getting back there anytime soon. And these supply chain issues, which probably were a main catalyst for, rising prices, are not going away as quickly as everybody thinks they are. And like I've said before, and you've said too, Mitch, China is a wild card here. And if they want to really screw up our supply chain, they can easily do that. And I think they are going to screw up our supply chain.
Yeah, I think it's important to mention also there is exactly what Kashkari was pointing to was the supply chains. And he's saying that that's really the focus here. Those have to normalize if we're going to get inflation back down.
I'm just talking, and obviously I'm finally pretty much done my build moving in this weekend, but I mean, we're still missing stuff there. And, we're missing downstairs fridge. We're missing our stove top, which was ordered 14 months ago. We're missing our front door and our side door. So we just got a temporary door in there. That was ordered 6 months ago. I was talking to my glass guy, and he was just talking about our windows, which we got done. And we have these slider doors. I was talking, he's like, there's a 14-month wait on those things now. Like, we have ours, but he's like, it's 14 months out. He's like, I don't even know like how I can do projects. He was like really complaining about the supply chain and saying, here, you go in and quote a job and you're like, yeah, we can get those windows to you in 14 months, like these specific ones. I mean, it's difficult, to even be in the construction business right now with these supply chain issues. So, stuff is just not getting easier, and we keep thinking, oh yeah, it's all getting better, we're getting back to business as usual, and it's not the truth.
The one thing I caught there was the downstairs fridge. So there means there's an upstairs fridge.
The bar, there's a fridge in the bar.
Oh,
so,
okay.
Yeah,
hey, you can't go wrong with a fridge upstairs.
Fridge in the
fridge
bar
downstairs.
is absent without leave, has not shown up yet, so not sure when it's coming. I don't even know if we have a timeline on that thing. So, anyways, we ordered a lot of this stuff. Like the stovetop was literally ordered a year ago, so I don't know what's going on there. It's maybe a special stovetop or something, but not coming anytime soon. It's nice when they actually show up with something, because you don't know how long these delays. They say, oh yeah, it'll be here in 3 or 4 weeks, and then 3 or 4 weeks come, they're like, oh, we got another product delay, be a couple more weeks, and then a couple more weeks go, and then it's a couple more weeks. I mean, this is how it goes. Trying to build a house right now is next to impossible. And, maybe if you're doing the cookie cutter stuff and they've got the supply chain, but when you're doing custom builds right now and you're trying to get stuff, it's very difficult. So, we did get ahead of it on some of it, but, so I'm getting a firsthand look at supply chain issues in that way. But there's other things too, like we talked about, like certain things, not on the shelves, like junior Tylenol and junior Advil in Ontario. You cannot get it. It's not on the shelves. Now you have to get a prescription to just go buy junior Advil, because the main ingredient is made in Wuhan. And obviously it's not easy to get right now. So they're pulling it off the shelves, and September's coming. There's, I do have a little bit, because I've had, I always have Advil because my kids are always sick. I'm just at that age. But I mean, this is the environment we're in. This is a tricky environment here, Mitch.
Well, I'll tell you that. It seems like there's no house party yet at Dennis's Dick's house, new house, but there was a party in BBBY this morning as they secure a loan here. Let's go into it. Let's talk about BBBY as it's getting that lift there in the pre-market. Already got to a high there. I think I have 1223s. Yeah, 1223s.
Yeah,
spiking up there. Bed Bath & Beyond, of course, securing a loan here. That's why that's moving. Has reported secure a loan to bolster its balance sheet. Retailer has selected a lender following a marketing process undertaken by JP Morgan Chase. Wall Street Journal reported, citing people familiar, and they said also that the size and the structure of the loan deal weren't immediately clear. The company is expected to provide an update on its effort to bolster its finance at the end of August. Bed Bath & Beyond needs $370 million to shore up its cash reserve and help pay its existing debt obligations.
I don't know why they didn't issue equity. Here they are, they're getting a loan. The company is just this stupid. I mean, Kramer's absolutely right. They could have issued stock here, a week and a half ago, and the stock's trading up at $30. Even if you got it at 20, you get it off. I mean, why not issue equity? Now you're hitting more debt here. Anyways, they're applauding it because the company's not going out of imminently going out of business. They're popping the stock here. It's up 33%. It went from massively overbought to massively oversold too. Let's be honest. It went from $30 back to $8 in 5 trading sessions. So it's not, out of the realm of possibilities that any piece of positive news, this thing was going to rip your head off, rally, and it did, up to 1157. I'm just thinking too, I was thinking about buying this at 878 last night. I traded a couple times, but I didn't have it. Would have been a good buy. I was just thinking, what if Ryan Cohen bought back in? This, I know we're not saying that's going to happen, but he seems to, obviously he's made a lot of money with his influence before. Imagine he bought back in. thing would pop 50%. Oh, Cohen's back in. It would pop 50%. I mean, it's just popped 31% on this. So not saying he did, not saying he's going to, but just saying imagine if he did buy back in, because he just sold the thing up at 25, 27, 28, 29. Imagine like, well, let's come back down here. I might as well dip my toes back in the water here. That would be a big filing if you saw Ryan Cohen get back in.
Yeah, take a look at that. We'll see if that actually comes out. I think that's the only way you probably get to fill this gap up. That would be a really interesting move if it did fill this gap. That's a gap towards 1765 there. So that's a long ways away from here on BBBY. We'll see what happens. Definitely holding some kind of up pressure now. I think you look to see if it holds at 1072 on pullbacks. Looks like we got it just a pullback right to that old resistance. So now becoming support around the 1072 level. You could see it on that retrace there. It went towards 1071, bounced right off of that. We'll see what happens. A lot of volatility in this name, like always. Just be careful out there, traders.
The meme stocks are all catching a bid here. You can look AMC trading up. The Ape is trading up. The GME is trading up. The a few other ones. They're not up substantially, but they're all trading up a little bit here, and that's obviously driven by Bed Bath and Beyond.
I'll put one on the radar. Party.
What's that one?
Party City.
Is that one of those meme stocks too?
Oh, yes. Meme stock. Gosh. And it's getting mentioned out there. I won't go into what social names are mentioned with this, but there's some Twitter influencers on this too.
Oh, gosh.
Talking about this one. Look at the daily chart. Look how this has been hanging sideways. These are the ones that I think could really go because it's been hanging sideways, hasn't had the run, hasn't had that big breakout. So just keep it on your radar. I'm not saying that it's going to run today, and I'll give you guys a little bit more insight. I've been watching some of the price action on Party City, and I've been seeing a lot of volume filling in between the 214s and 215s. So there's someone loading the boat somewhere in between there. That's where I'd be watching today to see it get back above. Once you get through there, there's this 245 and 250 that it's going to be definitely a mental hurdle to get through. If we can get through there, watch for the taking out of the highs. You got 267 and 265. Just
remember, all of these things are hot potatoes. And eventually, if you hold on to them long enough, you usually get burned. So, it might pop up. Maybe you get a squeeze in some of these things. But eventually, if you hold these things long enough, you get burned. So don't get these things stuck in your long-term portfolio. And then, all of a sudden, you're like, oh, what happened? Things back down at $1, and you're looking at a 50% loss. So, obviously these things can get hot. These, meme stock trades can go, but it seems like none of them have longevity really. So I just be careful. When you're trading these things, you can trade anything. It's got momentum on your side. You can trade it. Just don't get stuck.
One thing I'll note, and I see that a lot of people in the chat, let's stop talking about meme stocks and stuff like that.
I hate the meme stock trades.
Honestly, I can tell you right now, and you can ask Dennis this morning, I didn't want to talk about BBBY. No. And you could ask him. That was my specific word.
You have to. It's the stock
to cover it. We got to cover it, guys. I'm sorry.
It's up 31%. If I go to my big up filter, so this has every single stock that is listed in the US, and I'm looking at the gainers. And if you take out the penny stocks, which we might as well get out, Bed Bath and Beyond, anything under $5, I kind of ignore because I call those penny stocks. Bed Bath and Beyond is number one. It's up 31% out of all the stocks. If you go to number 2, you got Fetch. I don't know what Fetch is, if it had earnings or whatever, but FTCH is trading up substantially here too. And you got Sofi on the list as well. I have no idea what's going on.
I know what's going on with that, Dennis. We can talk.
Is it Wall Street Bets too?
No, that's all on the student loan concern thing that today Biden is said to maybe release news on that. And full disclosure, I am long on Sofi. I took a shot on this. I've been looking at the story, getting into it. And so I took a really small piece just for a swing trade off the $6. We'll see what happens on that Sofi. But let's go to Cathie here. I'll talk a little bit more about that. You guys can always follow along on live trading. We'll definitely take a look at see what happens on Sofi. Let's talk about Cathie selling out of some of her NVIDIA on the recent dip, and it's kind of interesting. Remember, she bought some of this, so let's talk a little bit about this. She dumped over 293,000 shares of NVIDIA on Tuesday via 2 of the firm's exchange traded funds. This comes after just 2 weeks after ARK bought 366,982 shares of NVIDIA. And of course, a day ahead of the second quarter earnings release. But that wasn't it. She didn't just stop there. She sold out on that. And then she said, you know what? Well, let's just go buying some Zoom here. Cathie Wood bought 839,301 shares of Zoom video communication via two of the firm's ETF, valued at over 68 million based on Tuesday's closing price. Remember, that's the second largest holding in ARK. And Zoom hasn't been the best chart lately. So
she sells NVIDIA to buy Zoom. That's what it is, 100%. Yeah, she just needs to average down. She's seeing herself get beat up. She's the one that averages down the most out of anyone. Like I've said, and I do still say that I think the ARKK 2022 low is in. That doesn't mean I'm a big Cathie fan, though. She does a lot of rookie mistakes. It's basically everything, you shouldn't do as a trader. She does. She adds to losers. She doesn't, usually cut losers. Obviously, just sticking with the story and believing that you're right and the market's wrong. These are all like classic first rookie mistakes. And, obviously she had the Tesla call, which was, crazy at the time, but ended up being right. And that's what made her famous. But, when you really look at her long-term performance, she's massively underperformed the Qs. So if you look at like when ARKK came into inception back, I think it was like 2015 or maybe even before that. You look at the Qs performance in that same time period. She is massively, from if I go back to 2015, ARKK is only up 100%. And if you go back to 2015, the QQQs are up 200%. So she's massively underperformed. So, and that's including just a ridiculously good call in Tesla. So you can talk about how all our other positions have just been a disaster because she had one of the best calls and, her most heavily positioned, stock goes up tenfold. And she's still underperforming the market. It tells you how poor of a choice of investor she's been on the other stocks. So just be careful just thinking, oh, yeah, she's, one of the greatest investors. She's not. She's massively underperformed the market. She got a name from Tesla, and that's really what made her.
Yeah, I just don't know about Zoom. I definitely, I would be concerned about that business. And the chart doesn't show me anything good here.
You got support, though, Mitch. You do. I can see there's support here. You got that low from May, 79.03.
That 80?
I
you're hanging on a one candle?
It came at it hard. We're still in a little bit of this buy the dip mentality in the markets. But it's just her. She's going to do that no matter what. She's not looking at the chart. She just averages down. She gets, in a position and her position gets crushed and she really believes, that eventually she's going to be right and she averages down. So she's selling a good company like NVIDIA to buy Zoom. Is it we were saying yesterday, I believe it's a value trap. I'm still going to keep saying that. But with that being said, there is some support at 80. I wouldn't be surprised if it bounces at 80.
We'll see what happens. Like always, one of the things that I think that is I think that's kind of more of a strategy of buying the 52-week low and then trying to think that it's going to come back. But hey, to each his own. If that's
that's what she does, Mitch. It's like she's clockwork. She's very
52-week low. I'll take it.
She's so predictable. When one of her positions is down 20%, she always buys more. She's so predictable. This is a cardinal sin in trading. But she's in it for the long term. She's got her 5-year time horizon, which in some cases obviously is not the case because she's sold off some of this stuff. But we've talked Cathie a lot on this show. And honestly, like I'm at a point, I think I'm going to unsubscribe from her newsletter because it doesn't, influence, it doesn't move price anymore. So you don't have to know about it. And who cares? She sold NVIDIA, bought Zoom. Nobody cares anymore. Her luster is now gone.
Yeah, it definitely.
She's become irrelevant.
It's not what it used to be. Let's just say that much for
She's
sure.
become irrelevant. Mark Chaikin called that 6 months ago or 9 months ago. Eventually this would happen. It's exactly what's happened. She's become irrelevant. She's not getting much talk on the media anymore. And she's had her time, like it was Tesla. So is she going to eventually come back? Maybe, some of these stocks are going to come back. I still think her low is in. I think her stocks got massively oversold, but I just can't follow that investment philosophy. I would never invest with Cathie Wood.
All right, now let's go ahead. Let's get right into our interview today. Let's dive into it. Now, I will let you guys know we will not be having video on our guest, but we do have him on audio. So let's go ahead. Let's bring on here. We're going to bring on Paula LaMonica, digital correspondent of CNN Business. How you doing, Paul?
Good, thanks. How you guys doing?
Doing great. It's great to have you on here. A lot going on, interesting moments out there right now. A lot of the kind of the meme stock hype out there. I'd like to ask you right off the hop, how do you feel about the comeback of MoviePass and, of course, the ape trade?
Yeah, I mean, I would be skeptical of whether or not MoviePass can have any significant success given what's going on with movie theaters in general right now. I mean, we've obviously seen what's happening with AMC and Ape. AMC is a very aggressive kind of self-promotional company, and I find it difficult to imagine that. Adam Aaron would want to cede some business to a new revitalized MoviePass. And AMC, to their credit, they do a pretty good job of trying to hype that stock in a business that bluntly is pretty challenged right now. You look at what's happening with Cineworld, the UK-based owner of Regal Cinemas. They're potentially filing for bankruptcy. I don't think the movie theater business is necessarily a great bull market right now, no matter what Adam Aaron says about AMC and the apes.
Hey, Paul, Dennis Dick, and I agree with you. I mean, you can make the argument, and I'll make it right now. Without the apes, without, the social media, I think AMC could be going the same way and could be out of business. They were able to raise so much cash because, I've never seen this in 22 years. I've never really seen shareholders like this bail out a company that was in serious trouble. So you got to give them props because they allowed, this stock to survive. They allowed this company to survive by, crazy buying the price up and then allowing the stock company to issue shares, very smart about it. Unlike Bed Bath & Beyond, which didn't issue any shares in their recent run, just completely ignored it. What are your thoughts here? Like I want to bring it over to Bed Bath & Beyond here in a second, but what are your thoughts just with these apes just being able to bail companies out?
Yeah, it is a real phenomenon now that the Reddit Wall Street bets crowd, the apes, the retail investors, they have a significant sway over several high profile stocks on Wall Street, and they're able to squeeze some of the shorts, be it hedge funds or what have you. And to give AMC management credit, I think they recognize how much of a shareholder base they have with the retail crowd. So that's why AMC is making all of these moves to kind of play to their base, if you will. Hence the ape preferred equity issuance and other moves that the company has made to really try and acknowledge that without this support, AMC might not be in much better shape than a company like Cinemark or IMAX or other big movie theater chains. But obviously those companies don't have that same fanatical support. And Bed Bath & Beyond, if you want to talk about that,
Yeah.
talk about a lesson in following the money and making sure that the big money is going to stick with the company, because when they bail, just look at how dramatic that sell-off has been. Now that Ryan Cohen has exited his position.
I mean, what are your thoughts here on Ryan Cohen? Obviously, we get this disclosure, it seems like months ago, but it was actually only about 7 trading sessions ago. And the stock pops, because, it's disclosed that he's bought more options. Stock pops from 15 to 30 in basically a day. And then, he discloses the very next day. So the day after he discloses that, he's bought more options, he discloses obviously to be able to sell the stock. And we find out that he indeed did and bails on the whole thing. I mean, it stinks of being gray for sure. I don't know if there's a case here for the regulators. Do you think the regulators are going to look at this? And do you think Ryan Cohen cares?
I think Ryan Cohen will have to care if the regulators actually decide to take a look, because last I checked, Ryan Cohen may not necessarily have the wealth and clout of Elon Musk, who routinely
makes fun of the
thumbs
SEC.
his nose at the SEC and doesn't really seem to have any major consequences. I mean, I don't think Cohen is necessarily in the same boat as Elon Musk. Whether or not there is an actionable case, that's not for me to say. I am not a securities legal expert, but I think it is fair to point out that there probably are going to be angry individual investors who might want the SEC to take a look. And we've even seen Whitney Tilson, the who used to run a fund of his own, say that this type of behavior was so egregious to him that he was asking the SEC to look into it as well. So I do think that there are people on Wall Street, both big institutional money and individual investors, who are rightfully confused by what Ryan Cohen has done with regards to Bed Bath & Beyond and want some answers. And he's been pretty quiet. He has not said anything about his motivation here.
All right, we're on the line here with Paula LaMonica, digital correspondent at CNN Business. Let's get into the Twitter Elon saga. Who do you think wins here? And did the whistleblower have an effect on the trial, you feel?
I think it's going to potentially have an impact. My guess, and again, this is no inside information by any stretch of the imagination. I would suspect that now, because of the coverage of the Twitter whistleblower and the pressure that is on the company, Elon Musk, I think, probably would still be interested in owning Twitter at a lower price. And I think the question now becomes, how low of a price does Twitter wind up possibly getting bought at in a new takeover scenario? The shares are trading just under 40 now. So clearly the north of $52 stock offer that Twitter agreed to with Musk, I don't think that's going to happen. But is a deal going to happen in the 40 to 45 range? Maybe. Is it lower if Twitter stock continues to fall? I mean, perhaps. But I think Elon Musk probably holds more of the winning cards in his poker hand than Twitter's board and management right now, based on what's going on.
Let's take it over to the Fed speak here, Paul, and we're going to obviously hear from Jerome Powell. This is going to move the markets. We're hear from him on Friday, but we got Jackson Hole. I mean, we've had a significant sell-off into Jackson Hole here. Is this just another buy the dip opportunity, or does the market really have reason to be spooked here?
I think the market should be wary, because Jerome Powell has been repeating a mantra for some time that the Fed is data dependent, and the market never seems to want to believe him. And now I think it has become incredibly clear that the Fed has to go meeting by meeting. There are no predetermined decisions on interest rates because things are changing so rapidly. So the Jackson Hole speech on Friday is important, but the big caveat is that Jerome Powell can't see into the future, and he doesn't know what the jobs numbers are going to be when the August jobs report comes out. And then we've got all these inflation prints that are going to be coming out before the Fed September meeting as well. If we have a repeat scenario of what happened last month, where inflation pressures continue to cool, but we still have solid jobs growth, that really makes it more difficult for the Fed. What do you do in that scenario? Do you keep raising rates aggressively to try and cool off the economy? Do you not do so because you don't want to choke off jobs growth and create a recession if inflation is in fact finally starting to abate? I don't envy Jerome Powell and other Fed members. We have the fun job of just criticizing whatever they do, because we're never going to be wrong, because we're not as accountable as
True that.
That is the truth, unfortunately. And I think fortunately, we don't have to be doing those FOMC conferences. But thank you for joining us today, Paula LaMonica, digital correspondent at CNN Business. Appreciate you coming on, and we'll definitely have you back, Paul.
Thanks a lot. Appreciate it, guys.
Thanks,
have
Paul.
a good one. All right, let's go ahead. Let's continue going here. Let's get into the earnings now. We're going to talk about Nordstrom. Let's get into that first. Let's go JWN, and I think this is interesting. Of course, after Macy's earnings, it was kind of getting a little bit of a push up yesterday. But let's take a look at what happened to Nordstrom this morning. Definitely down big here. EPS at 81 cents, beating the 79-cent estimate. Sales at 4.09 billion, beating the 3.95 billion estimate. But they lowered the guidance. It's been about guidance this earnings season. Nordstrom sees full year 2022 adjusted EPS on the low range of $2.30, high end at $2.60 versus a $3.05 estimate. So at least the low end is way off of that estimate there. One of the comments from the CEO, Eric Nordstrom, customer traffic and demand decelerated significantly beginning in late June and predominantly at Nordstrom Rack.
That's going to happen. Like we keep talking about, and this is why I'm still cautious on all the retailers, and they all look cheap, but they've been value traps. And the reason, again, we sound like a broken record on this show, but it's starting to show up in the data, is when you just raise interest rates, it doesn't just all of a sudden kill demand in one day. There's a process, and we've talked that process before. People will start to, okay, well, they're not going to go for the fancy dinner. Well, they're maybe going to cut back and buying some toys or potentially sell the toys, and they start racking up the credit card debt. Eventually, it starts filtering its way through and slowing demand. It doesn't happen in 2 weeks. It doesn't happen in 1 month. It happens over the course of 6 months to a year. So this is where you're going to start to see this happen, and this is why all of these cyclical businesses that, obviously, like retailers even are cyclical, because, when you're in an expansion, people got money, they're buying more stuff. When you go into a recession, people are backing off on buying, stuff except the bare essentials here. So, you're not going to Nordstrom and buying fancy purses and fancy coats, and that obviously if you're starting to get strapped for money. So you look here, it's not surprising. These things look dirt cheap from a valuation perspective. But if we go into recession, which I believe we're going to, they're going to get cheaper. I own none of these companies. I like, I was saying, Macy's or maybe potentially Kohl's. I shouldn't say. I do have a little piece of Kohl's. But you just think they're obviously priced in a lot of bad news. You can look at a Kohl's even being down as far as it is, or a Macy's. But if you go in a recession, it could get a hell of a lot worse. So just don't get caught up. People get caught and flawed just looking at PEs, and they're like, oh, we just need a cheap PE now. We can't go wrong. This is what they were saying at Macy's when the PE was 7 or 8. The stock was $28. And they're like, well, you can't go wrong here. They got the real estate, everything. You're going to make money. Are you? It's $19 now. How's that value doing for you right now? And it's been a kind of a value more oriented market where we've kind of moved, from growth to value. This have not participated. There's a reason for that. And that reason is that this recession is coming, and that's going to be Macy's and Nordstrom are going to be right at the top of businesses that are going to get hit from it.
The consumer's starting to think like the Jungle Book here and looking for the bare necessities.
They're going to have the bare necessities. I like that. But they're not going to have a choice. I mean, people are going to have less money. That's just the way it's going to be. Yep. So, and if inflation doesn't come in anytime soon, we're going to have to keep interest rates up. Like ideally, the Fed just wants to jack rates, bring interest rates down, and then bring the rates back down. That's not going to happen as quickly as the Fed wants. And that's, to the Fed speak comments that you talked about 20 minutes ago, saying this could be more embedded, this could be more prolonged. And if that's the case, these interest rates are going to be higher a little bit more longer. And that is eventually going to hurt people, and seriously hurt people. So you got to be very, very cautious with just coming in here and saying it's got a P of 5 or 6. How can I go wrong? Recession will make it go wrong.
Also, I think they're starting to point towards a story that at least these companies don't seem like they're going to just kick it out the waters in the holiday season time. Once holiday season rolls around, it could be less earnings than we expect. So something to keep on watch. Let's get out of Nordstrom. Let's go to
Toll Peloton
Brothers.
Getting a rip here too.
Peloton
832. So this just broke here. Strikes a deal to sell fitness equipment and apparel on Amazon. So sounds like not a big deal, but it's a storied stock. It's got a high short interest.
Okay.
That's probably going to get the pop because every time you mention Amazon with anything, it's going to get a pop. So, that's, I'd be careful, shorting into something like this because there's obviously they're talking about on CNBC here right now too, Products
Yeah.
available on Amazon starting today. So anytime you get a mention with Amazon, it's going to get a pop. But let's move away from these, high flyers, and talk real stocks. Well, not that Peloton's not a real stock, but talk, core stocks. And because we're coming into some serious earnings here, we talk Nordstrom. We can continue to go here on a couple other earnings reports, but we've got a preview for some big guns tonight as well.
All right, let's go to Toll Brothers. Also, EPS coming in here at $2.35, beating the $2.30 estimate. Sales at $2. Sales at 2.5 billion, beating the 2.48 billion estimate. Toll Brothers lowers their full year delivery guidance. Now expects to deliver 10,000 to 10,300 at an average price of 920,000.
Same conversation we just had with Nordstrom applies to Toll Brothers. Yeah. There is going to be demand destruction here, and it's showing up already. Obviously, you can look at the P and you can say, wow, how can I go wrong with the P of 5 or 6 or 7? We go into recession, which I believe we're going into. Toll Brothers, nobody's building a new house. So it's expensive as hell. The cost to build is just astronomical now. The supply chain issues that I've went through, obviously mine was custom build. It was a little bit more difficult with some stuff. But, even that, it's difficult even to probably build these cookie cutters and get stuff right now. I mean, we have a concrete shortage in Ontario as well now. There's like a million things that, you think, oh, yeah, you're by the supply chain. No, you're not. You're not by the supply chain issues. And housing, the builders here are like ground zero for supply chain issues. So I'd be very cautious buying these dips as well.
Yeah, one thing that I've been pointing to is when would that ITB, that home construction ETF, crack? And I feel like it cracked about 2 days ago, and now you're starting to see it really start coming down. You could also watch for Lennar to kind of show you the same similar chart. It's very similar chart there in Lennar. I think these are starting to come back down. They'll definitely need something to help it, but if you take a look at all the kind of information you get out of the housing market lately, it's been showing more of a housing recession. So we'll see what happens to these real estate stocks and these residential construction stocks. Let's get out of Toll Brothers. Let's go to Intuit here. INTC.
INTC would be
look at that. Intel, the other dog, but yeah, we'll get into this one first.
Intuit's not a dog. Intuit's been an unbelievable performer here. And if you want to look at stocks that have held up very well, Intuit has been a company that's been run so well. It's a great company.
For a software name, I have to say this has hung on a little bit better than most software names. I mean,
it's held on really well.
Mm-hmm. Let's get into the numbers here. So Intuit at $1.10, beating the 98-cent estimate. Sales at $2.40 billion, beating the $2.34 billion estimate. Intuit sees full year 23 adjusted EPS at $13.59 on the low end and $13.89 on the high end versus the estimate that was at $13.81. Sales at $14.48 billion on the low end to $14.7 billion on the high end versus the $14.47 billion estimate.
So guidance was fine. And, that's obviously they still have the sales growth of 23 to 25%. I mean, you got growth, you got a reasonable valuation. It's not crazy, 13. So you could go 30 times earnings trading. It's not insane. So, I mean, it's been one of those companies that is a great, it's been actually a great stock. I mean, it's come off with everything. Is this a stock that I would buy on a pullback? I think so. I'm not chasing anything in this environment though. But, you just think about where the stock was in 2016, $100. Now they're making $13 a year. What, that was value back then. And it appeared like it wasn't value, but they grew and grew and grew. Obviously, they've right in the middle of, cloud, right in the middle of web services, right in the middle of everything. So where you want to be. So I think it's a company that I'd like to own. I'm not chasing anything up $25.
All right, let's get out of the Intuit talk. Let's talk about one of the topics that will be talked about today is the Tesla stock split. I got some information here from Gary Black. He's a great follow on Twitter. I follow him. He's a managing partner at the Future Fund, talking about tonight after the close, Tesla's 3-for-1 stock split. And after the 2020 stock split, that was a 5-to-1, Tesla rose 12.6% the next day on August 31st, and then fell 18% in 3 days after the management announced a $5 billion secondary. This time, Tesla doesn't need money, and Tesla has $18 billion in cash.
I mean, you've got a setup not bad into the split. I wouldn't be surprised if it had a decent day. It's not surprising it started running yesterday too ahead of the split. We know I've talked, about, events, and, we just did, a whole webinar on trading catalysts. 3-for-1 stock split is definitely a catalyst. It was strong yesterday ahead of this. Is it strong again here today? I tend to think so. I think it could show some relative strength. Obviously, the overall market rolls over. It's a different story. But, as long as the market holds up, I think Tesla probably trades well into the split. From a historical quantitative perspective, typically stocks are strong into the splits and weak after the splits. So ideally, you want to own them into the splits and not own them after the splits. It's your timing of that is always, an issue. We also have Ron Barron coming on CNBC tomorrow morning, who's one of the biggest Tesla bulls out there. So I'm sure he's going to say some positive stuff tomorrow morning on that as well. So you have multiple catalysts for owning the stock today. I'm not sure about owning it after tomorrow, though.
Something definitely we'll keep watch to see what happens. If there's any mentions, of course, of equity needed, or will Elon sell some more? Those are kind of some catalysts that I could look out for. But we'll see if Tesla can take out that 900 area. Yesterday,
big level,
trying to take it out. I felt like it was on its way. It went to 896.48. Let's see if it takes it out today. I have a high so far at 899.60. And so definitely keep that one on watch. If it gets to that 900, I think it could start pushing. We'll see if it gets up there today. All right, let's getting out of the Tesla talk. Let's keep going here. Now, one of the topics that Dennis wanted to come make sure we got covered was he's a big Wendy's fan, I heard. Wendy's E. coli breakout. Be careful out there. Wendy's looks like there's a report out there that there's an E. coli outbreak that's sickening more than 100 people reportedly becoming ill after eating lettuce from Wendy's sandwich, far more than the CDC reported last week. Lawsuits against the company are starting to pile up. And of course, this came from the Post.
So multiple thoughts here. One is we don't know how big this outbreak is. Obviously the stock's been hit slightly on it here. It's getting hit here again because the New York Post was reporting that this is a lot more widespread than Wendy's is letting you know. The wild card with this is we have precedents. We know how companies perform with E. coli. If it starts to get widespread, it destroys demand. And CMG went through this. The stock went from 700 to 200 in the better part of 6 months to a year. If you look back, we can go back on the chart maybe to CMG to talk about that, but it was in 2020, obviously. Or let's just go. Actually, no, it wasn't. It was. I'm trying to grab it. It was the early 2020 when the stock was $900 and then it went down to 415. I believe that's the time. If I'm looking at the chart, maybe that wasn't. Maybe that was the COVID. So I'm trying to see when that was. Anyways, the stock. Yeah, okay. I think it was maybe 2015. Was it that long ago? Are the years flying by this fast, Mitch? Was this 2015 when CMG had the E. coli? Check.
I think I was in college, so I'm gonna go. Oh
my gosh, the years are flying by. That was 7 years ago that Chipotle had the E. coli outbreak. But anyway, so I'm just saying you have precedents here where when E. coli starts to go widespread, it absolutely destroys demand. People don't have confidence to go there. It took a long time for Chipotle to get it back. It took 3 years for them to get it back, but they did eventually. And obviously people are confident to eat there again. So just be cautious, just coming in and buying the first dip on this. You don't want to be the one that the next headline all of a sudden it starts going, because they can really crush stocks on this. So I'd just be cautious. If it turns into nothing, I see like a 1 point upside with Wendy's, kind of getting back to where it was, before this news hit. If this goes widespread, Wendy's could be back down at that 16 support level. So I kind of see a 4 up, 1 down. So we don't know which way it's going to go. Maybe it's a nothing burger, pun kind of intended. Maybe, this is just, very isolated. But New York Post is saying it might be more widespread. New York Post, sometimes, it's not always accurate. Sometimes they are. So my thought process is I'm just going to stay away from this one because I don't like the risk reward setup.
All right, let's go to one more earnings here. I thought that was interesting. Let's talk about Petco, the wolf.
Wolf.
Yeah, I know your cats might get mad about this, but it's called Wolf. Let's take a look at
good ticker symbol. Chewy, Wolf. They are all over. These pet food stores are all over these ticker symbols.
So they lowered their guidance here, but I'll give you the numbers here. EPS coming in at 19 cents, missing the 23-cent estimate. Sales at 1.48 billion, missing the 1.49 billion estimate. They also see full year 2022 adjusted EPS at 77 cents on the low end to 81 cents on the high end versus 90-cent estimate there. Sales at 5.97 billion to a high end of 6.05 billion versus a 6.13 billion estimate. So lowering their guidance there, and a miss and a miss.
Tough stock. It's thinly traded. It's a dog. It's a dog today. I'd say you got support down there just under 14. If I'm looking, I see 3 lows in 4 days, 1381 to 1385. It's come a long ways. Maybe that's where it gets a first bounce. Next.
I would just extend this monthly candle. So do you see this monthly trend? Until that changes, I won't even look at this stock.
There you go. And it just goes to, right back to basics, stocks and downtrends, you sell rips on stocks and downtrends, you buy dips on stocks and uptrends. And I mean, there's so many stocks in downtrends still. That's why the rip from the last, when it started selling off from the last 6 weeks, was just such a good opportunity, and it was a gift, and it's been proven a gift. And how the stocks have come off from that is just nothing short of impressive. I mean, to just see like how much Square, I keep going back to Square, but reports earnings, kind of hangs on, $92, $70 now. I mean, it's literally giving back 2/3 of the gains here. So impressive sell-off. You got to take those gains on the stocks when they're, in downtrends and they start ripping higher. You got to cut those losses into those rips or take those gains, because eventually those trends persist.
All right, let's go to Sofi here. I thought we could possibly get to it, and then right after this, we'll start some ticker time. So sure. I know that the chat wanted us to talk about some of the stocks that they were looking at. Well, tell us what those stocks are. Throw them up in the chat. We'll get to an extended ticker time just for you guys out there. All right, now let's talk about Sofi's situation here. It's up there towards 670s. Full disclosure, got in this one yesterday at 617. I also talked about it on our live trading stream. We talked about why this trade idea could potentially come into play. A lot on this. President Joe Biden expected to announce his decision on student loan forgiveness soon. It was expected. He had given himself a deadline for the end of the month, but it looks like it could come as early as today. Multiple sources reporting that this could include student loan payment, pause on student loan debt payments, and forgiving loans up to $10,000 for borrowers with yearly incomes of less than $125,000. So interesting to see Sofi already getting a pop on this before the news even comes out. That's why I got in it yesterday. I thought it could just be kind of one of those buy the rumors and then eventually sell the news, but we'll see what happens here.
Mitch, good call on this one yesterday. Obviously getting the 9% pop here. So you've got this on for a short-term trade. I mean, I'd look up at near $7. I think this thing gets near 7. That's where he topped out in July. Kind of would fill the whole head and shoulders thing. So I think there's room to 7, but I wouldn't get married to this one either.
We'll see what happens if it goes through, and the whole student loan situation has definitely got a lot of investors talking about it, whether it's the right thing to do or the wrong thing to do. We won't get into that, but definitely it's something that's talked about out there. We'll see what other stocks kind of move with Sofi. I don't have one to kind of give you right now, but definitely keep your eyes on these. We'll see what happens if we get a run or not, and some mention today. All right, let's take some stocks from the chat. What do you guys got? What are you guys taking a look at? I saw FSLY Fastly being mentioned in the chat. That is, what is it to talk about, Mike?
Holy, this has been the dog of all dogs, has not participated at all in the recent rally. There's not a lot of growth names that didn't participate, and this is one of them. This is sitting right on is that a 52-week low or an all-time low? It's close to an all-time low here on Fastly. I always say when stocks are making new lows, you got to go. We're still holding on. So if you want to hold on to that 950, there is support there, 949, 950. That is the support of all support. The stock starts taking out 950. I want no part of it. If you want to take a shot, you think it's going to bounce there once, you can take a shot, but don't get caught. When stocks are making new all-time lows, you need to go.
This just tells you it all right here. Look at this monthly chart. Ugly. ugly until that trend line
There you
breaks. Kind of gotta leave these alone. That's the way I like to look at these. I'll just look at the monthly, and until the trend changes on the monthly, and look at the last kind of, what is this? This is a whole almost 8 months of just straight red. All right, let's get out of Fastly. Let's take some more stocks from the chat. Let's go to Nvidia as they report, of course, after the bell here. How are you looking at this chart? Looks like yesterday I didn't do too bad with calling a little bit of potentially a bounce in these kind of tech names. I didn't expect a huge run up, but I expected a little bit of some sideways or a bounce action. Now it gets interesting today. Do we take the next leg down?
NVIDIA? Well, it has earnings, so there's no way to even talk technically on a stock when it's coming into an earnings report here. Putting the little double bottom for the last 2 days, 169, 169.70. But I mean, when you have an earnings report, you can trade it technically today, but after 4 o'clock, it's got earnings. So it's going to go. The one thing I will say is it kind of already got it down. So you kind of think they already kind of put the bad news out there. So if they say anything okay, maybe it comes back up here a bit. But overall, market is going to dictate this move as well. Let's see what the market's doing at 4 o'clock. We're quiet here this morning. It's dog days of August, but obviously earnings are going to dictate this move.
Something that we'll keep on watch. We'll see what happens when the earnings come through. Let's go towards another one. Let's see what we got here. If there's any of them that catch your attention also, Dennis, we can grab one. Let's go to MTTR. I haven't heard about this stock in a while here. Matterport, of course, this is a kind of metaverse stock that does.
I know nothing about this company. It's a $4 stock. Anything under $5, I typically don't trade it.
It used to not be a $4 stock. This was a metaverse type of company, and I think that you got to wait to see something kind of get back into the limelight on the metaverse. For right now,
I hate all metaverse stocks.
Yeah, it's out of favor.
I'm just not a fan of metaverse. I watched that commercial that CNBC airs 152 times a day, where the girl's there and then she's looking, and then she jumps into the thing, and then she's floating around. She's looking at beautiful nature. You want to see nature? Go outside. You can actually see nature. You don't have to jump into the metaverse to see beautiful trees and stuff. The metaverse is overrated.
All right, let's go towards some of the strongest stocks yesterday. Good. I like to bring those up. Good job, SJ, talking about Hal here. Halliburton had a strong day yesterday, setting on up here for the daily kind of high to get through 3182s. Nice little setup here on the 15-minute also. I'm going to be watching some of the oil plays. It just seems like they just want to start getting strong here. What do you think about Halliburton?
Jump in. I mean, this stock breaking out from 30, nice breakout from 30. So I think I would be a buyer of pullbacks on this, at least from a technical basis. Oil seems to try and show some life here again, too.
Yeah.
Oil's been sold off. I think I'm a buyer of oil stocks on pullbacks. Maybe not in the long-term portfolio, but as trades here. Oxy, I've been all over every pullback I'm buying on Oxy. I don't have long-term, but I've been playing it from the long side almost every single day. As it pulls back, I buy some. Pulls back, and then I'm selling. So I've been trading in and out of Oxy pretty much every night. I feel like I've always got that thing off and on.
Can't bet against Warren.
No, well, you know that I go with Warren. If there's anybody that I go with, and it is Warren. And he gave us so many chances on Oxy in the 50s and 60s, and it kept hanging on. And now he's going up to 50%. Now they're all ripping it, roaring it higher here. I mean, Oxy's just been
looks like I was
Warren.
I was early on that one.
You don't want to chase Warren, but when Warren stocks pull back, you buy Warren stocks on pullback. So here's the deal. When stocks are in uptrends, you're buying dips. When Warren stocks are dipping, you're buying dips. That's it. So Warren Buffett is a hell of a lot smarter than almost all of us here, and he has a hell of a lot of influence in this.
What was he doing? He was taking those discounts every time it dipped on the daily, and he loved that 57 area. And I think we're going to find out. Do you think he took the 50%? I mean, we won't have confirmation for a while, but do you think he took it and that's why I got this run?
No, I think you'll see. I think he still has to, as he buys it, Mitch, I think he still has to disclose every 2 days because he's over the 10% threshold. He's over 20%, I believe, here now.
Okay.
So I don't think he's chasing it here. I think
so?
He's waiting for a pullback. So he's now got permission to go up to 50. So this thing pulls back to mid-60s. He's absolutely buying. But Warren does not chase. This is why Warren's such a good investor. He doesn't chase. He doesn't, he will cut losers like the airlines when he feels like the story has changed. I mean, and obviously, you know, he's got the longer term time horizon there, but he doesn't chase stocks. He's not buying this at 73, 74, 75. He'll wait till it pulls back again, and it will. And it gets in the mid 60s, then he'll start buying more. So that's the thing, is on the dips on this thing, you have like the Warren put, where you know he's coming in and buying the dip, and he's huge. He goes from 20 to 50. He holds the stock up by himself. So I feel safer in a stock like OXY than a lot of other stocks. So, and I don't have a position in it right now. Like I said, I'm seem to trade in and out of it, but I'm biased long this thing. So it's in an uptrend. Every time it pulls back a bit is an opportunity to buy it, in my opinion.
All right, and I'll keep watch also on Marathon. It did get not Marathon, Exxon Mobil. Exxon did finally get above that 95 level, so I'll be looking for pullbacks into that level now. Below the 96, 93s, going to be looking for some pullbacks on this one. Been waiting for it to get back above kind of those highs in the 95s. Now this is looking interesting. We'll see if it really takes off and eventually gets towards that 100.
Buyer of all oil stocks on pullbacks. That's where I'm at right now.
Yeah.
So
all right. I saw
they just sold off enough. You know, now they've run a bit, so you need a pullback here now on these things, but you get them. The pullbacks come. So, you know, you don't have, it's not the market that you have to chase in. I wouldn't be chasing. Is ExxonMobil going to see $100? Probably. Is it going to pull back before that? I don't know, but I think eventually you get a pullback to buy.
Not much I could say on that Para. I know that Buffett took some to Florida, but there's not much going on there. Let's keep going. Let's go to the next one here. This is kind of a parabolic stock, but it's an oil stock. It's INBO. Definitely just be careful with stocks like this. They do run significantly. It's going to move up and down.
Too thin for me.
Yeah, too thin. I honestly, we take a look at these at live trading. Come on live trading. If
these are live trading stocks, because
exactly.
And people are, you know, people have kind of been upset, and you know, I apologize. We talked the meme stocks for maybe too long here today. I do apologize to the listeners there. Now, on this show, they like talking the big stuff, because this is what I trade. You know, S&P stocks, the big movers. You know, what's, you know, not necessarily the percentage based movers, but you know, the core companies that people are buying and selling and owning. You know, the wide institutional ownership. So we stick with those stocks. We do talk this little stuff sometimes. Peloton's been asked multiple times. We already mentioned the Amazon thing. I already said that, you know, on Peloton here, I wouldn't get married to that either. Obviously, it's hard to fade, you know, when you got a headline with Amazon here and, you know, potential short squeeze going on something like that. It has been oversold. You see stuff like Bed Bath & Beyond makes me scared to short Peloton. But again, you know, I think when the dust settles here, I think Peloton is, you know, a lot lower stock when I look at it a year from now.
All right, I'm getting a Marvel call out. We don't get that one too often to take a look at. Tech stock just hanging on here. See a bunch of kind of lows right here. I'd point out these kind of 50 55s, 50 42s. A lot of lows in that area. Let's see if we crack that through and go towards 50.
Reports tomorrow night. Full disclosure, I'm long it, so I'll just leave it at that.
Don't worry about it. Well, I'll take a look. We'll see what happens. Really, on semiconductors, I think it's going to be a matter also how the report of NVIDIA comes. We'll see what that kind of brings. Let's keep going. Let's take a look. Another stock here, Room being mentioned. That's interesting there.
These are all small stocks. These are for live trading. I'm going to take over this ticker time. Mitch, you have that tendency to just grab. You love the small little stocks because this is what they trade on live trading. I'm not.
That's probably what it is. It's catching my eyes.
You are. It's because that's what you like trading, is the small storied stocks there. And I mean, Vroom, it's pulled back. Some of these I would be careful. Like I think they've pulled back now, you know, a lot with Bed Bath & Beyond. So if Bed Bath & Beyond having a good day here today, maybe you see some of these things have a relief rally here just because they've been sold so hard in the last 6-7 days. But let's jump in like PayPal, because this is my kind of stock. I trade PayPal almost every single day. It's a fun stock to trade. It's went from growth to value. It's pulled back here. I mean, at 90, I think there is, you know, it's interesting that PayPal's held up so much better than Square too. And it's probably because valuation is obviously a lot cheaper than a Square here, Mitch. But, you know, I think, you know, we fill the gap down to 90. I think you could find some buyers in here. What are your thoughts on PayPal?
Yeah, I think it's just going to be one of those things that just hangs on. I think until we get out of the recession talks and things like that, that's when I think PayPal will really start going again. Until then, I think you're kind of going to be in some sideways chop between here. I could see it even going up to maybe around above 100s, maybe to the 118s. But the monthlies just show me, at least in my eyes, I think we're getting some sideways action on PayPal.
We got Snowflake, SNOW, which is going to report tonight. So hard to do technicals on. I will say some of these, stocks, the cloud names, even the chip names have pulled back. So the bar is now a little bit lower. So can they get over that lower bar? Maybe. Big companies reporting tonight just to talk. So NVIDIA's your headliner, obviously. But then you have Salesforce reporting tonight. You got Snowflake reporting tonight, Splunk. You have, even retailers, Williams-Sonoma, which is high-end retailer, which we've been talking before. The high-end retailers are holding up a little bit better than the lower end because they don't get hit first. Rich people are still rich. Williams-Sonoma sells high-end stuff. So, a business like that is still holding up, and we can look at WSM. The only thing I will say is WSM, wow, what a run back, from $100 back at the low of May to 160. The stock's up 60%. So the bar is a little bit higher here. So I'd probably be cautious going to the report just because the bar is higher.
Yeah, I feel like that's a little bit of extended there. I think, we're watching a lot of ARKK names. We're talking about Snow. We're talking about Unity. Shop also mentioned in the chat there.
Well, that's interesting too. Shop has come back down to that major support. So you're not chasing here now. I'm not sticking in long-term portfolio because valuation is still too much. But as a trade in the lower 30s, I think Shop could be a buy. You've came, $45. We were here 7 days ago. Now you come all the way back down, massive support at 30. You can get this thing at 30. I think it bounces there again. Why not? It's bounced there 4, 5, 6 times. If it can bounce there 4, 5, 6 times, it can bounce there a dozen times. So Shopify, support until it's broken. That 30 is huge. And what about pins? And then I'm going to let you go to live trading.
All right, pins,
I just want to talk pins here too, because obviously with the Elliott, everybody gets involved. Oh, buy. Well, it's starting to leak here. These are the kind of times where actually maybe you're looking at a pullback here and you've got an activist like Elliott in there. Maybe this is an opportunity. If pins fills that gap down to 20, it actually might be an opportunity to buy. So I'm not going to Shop, and I'm looking at pins as potential. Obviously, oil stocks and pullbacks as well. But I'm kind of interested in the pins here at 20.
Yeah, the shadow fills have been a play to watch, I think. And
shadow fills, I like this.
Shadow fills. That's what they are, man. The shadows, and definitely, I think the shadows have been one of the best plays out there. Whether it's a gap up, gap down, they both do it. I mean, right? We saw Micron do it on the way up, and now it's trying to do it on the way down here. So it gapped up, it got on up there, and now it's gapping on down there, and we'll see if it kind of bounces here. A lot of these, I think you're kind of keeping an eye on to see what happens. If NVIDIA comes in with a bad report, I don't want to see where Micron ends up.
Everything. Yeah. NVIDIA is going to drive the bus on all the chips here. So, But again, remember, the bar was already set lower by NVIDIA when they pre-reported. They gave us a little bit of look just a couple of weeks ago here. So does that mean that, it's going to be okay? I think so. I tend to think that it's going to actually be okay just because they've already kind of put the bad news out there, unless stuff's really deteriorated in the last couple of weeks. They kind of already, gave you a little bit of a warning. So consider that. But if you're trading any chips here, NVIDIA will be driving the bus after 4 o'clock.
All right. Last thing before you get on out of here, I think we'll get Dennis on out of here. I'll give you guys, I just wanted to make sure that I could give you guys at least some of the economic data that came out. Durable goods estimated at 0.2. Let's take a look at that. Looks like I don't even have the actual in there. Should have got already filled there. I'll go ahead and I'll make sure. Yeah, it didn't really move.
Durable goods, nobody cares.
Yeah, nobody cares. I'll tell you one number to watch for tomorrow, the PCE deflator.
There you go.
Keep that one on your radar. That one's definitely going to be one to kind of keep on watch. Here's the cores.
What time's that come, Mitch? Is that 8:30? PC deflator at 8:30 or 10?
Yes, 8:30.
It's at 8:30?
So we'll keep watch on that. That's definitely going to be a big number to watch. And, of course, Jerome Powell on Friday. That's going to be the major thing to kind of keep an eye out. But the PCE will give us a little bit of insight, right? I mean, if it comes in hot, kind of already know what Powell's going to be talking about. Have a good one, Dennis. Go do what you do best.
Take care, guys.
And nail those trades. All right, I'm going to go ahead and get us over to, of course, live trading coming on next. So definitely smash the like button if you guys enjoyed today's show. And if you guys have some feedback, hit the comments after the show. We got no problem with some feedback. We'll definitely take it just the way we did today. And we're going to get you guys over now to some live trading action. We've been hot. I've continued the streak. Yesterday, one of my best trades was with a smaller oil play, HUSA. We're going to try to continue on the streak here. Come on over to live trading with Lord Ryan and myself. Let's see what we got today. I'll see you guys on over.